Uh, Ladies and gentlemen of the crypto space, we're live on a Friday, February 6th at 11:35 a.m. Title of the stream is very simple today. All things considered, what's going on in our favorite markets. And it's a common topic that we discuss. Most of what we discuss is it's not repetitious. Everything we discuss comes at a very similar topic from very different angles to give this holistic picture of what we discuss from as many vantage points as possible. Excuse me. So, a divergent methodology. What does that mean? Basically, we take what is relatively simple and put it into sophisticated terms and words. The point isn't to complexify things, the point is to highlight and realize that what is simple isn't really simple. It's very easy to throw around the phrase hodl. Hodl, hold on for dear life, or hold, if used in correct nomenclature, does not encapsulate the reality of what the process is. It implies so much so turning off one's brain and not thinking. The last thing we do, the last thing we discuss is not thinking. And that's exactly the point of a divergent methodology. We think extensively, except we think differently, where in reality, we actually hodl. But we just define it in terms that are sophisticated, robust, meticulous. And that, to me, gives me the clarity and the comfort that I need in order to navigate these markets successfully. Now, the destination is identical, whether you hodl or you have a divergent methodology with capital management, cash positions versus investments, cash flow, optimized accounting. See, obviously, that everything I just said is the same thing as hodling, except infinitely more sophisticated, especially when you start to discuss the realities of accounting and the complexities of that entire world. How the hell are you supposed to navigate what we just experienced yesterday's drawdown? This is a remarkable candle. I mean, the only thing comparable is probably May of 2022, second week of May 2022, May 9th in particular, Monday. As you can see, this candle that I'm pointing at that's your wick. So we could easily see continued downside. There's no reason to expect anything other than just increased or more frequent kidney punches to people that think they have an understanding of this space. Isn't that the point? The point is the majority of folks are not prepared for volatility. They're not prepared for the infinite drawdown. They're not prepared for the duration involved in these assets. They're not prepared to even understand the nature of the damn assets to such a degree that they opt for and choose this phrase called hodl, which implies stop thinking. I own, and I'm going to continue to own. I have a 10-year time horizon. I'm going to buy it low and I'm going to sell it high. Something that appears simple, but it's so not simple. And then we take it to another level with the investments because the hodling does not apply to investments. We define things that people typically hodl as cash, liquid positions that can be purchased and sold on a whim, on a Saturday night bender after 20 beers. Oh, you're having an emotional outburst. I'm going to sell it all. I'm freaking out. Oh, maybe the hodling didn't work out so well. So the divergent methodology that we've discussed eliminates that reality or that potentiality. Can't sell. But this is exactly why I tell everyone it's a purchase, not a position. This is why I tell everyone what's the fair market value of a asset that's locked in perpetuity. that's permanently deterministically locked. It's zero. So you don't have a portfolio value. Anything that's not liquid, that's provably not sellable, has no value. No value with regard to fair market value in terms of traditional accounting conversation. But clearly it has value because in this new world of digital asset ownership, this asset, this ownership that cannot be sold gives you rights, which is akin to what a dividend stock that gives you those traditional rights as they're historically discussed, rights to cash flow. Yet it's so different because you could sell those dividend stocks or you could hodl them, but you can't sell deterministically locked digital assets. And that's the difference. This divergent methodology does many things. First and foremost, for myself, it provides me comfort. I have a portfolio that's almost entirely a fair market value of zero. Aside from cash, the investments are worthless. Worthless in the traditional sense with regard to liquidation, of course. We just clarified that as best as possible. And and you cannot optimize accounting the same way. So with hodling and cash, that is straight up IRC 1001. That's capital gains rules. Eisner v. Macomber. Traditional rules dating back going on the better part of 100 years. So I think it's the 1950s or 1960s, Eisner v. Macomber. I'm probably off, but the point is, it's the mid 1900s, and that's when those rules date to. And they're very simple rules: cost basis, fair market value. That's it. What you bought at, what you sold at, minus what you bought at, and there's your capital gains. But those rules are not the same for deterministically locked assets. And that is what I focus on, and that is why I focus on it, and that's why I'm infinitely more comfortable than so many folks that attempt to navigate these crypto markets. And are they really navigating them? Or are they not floundering through them, but squirming through them with all this emotion, all this discomfort? There has to be a better way. And that is really, truly, ultimately was encapsulated by the phrase a divergent methodology. Once you fully process the reality of the divergent methodology, there's infinite comfort. I'm watching the drawdown and I'm like, all right, how much cash do I have? Do I have enough cash to pay my bills? What's cash flow like this week? Cash flow is down, period of austerity. Cash flow is up, period of prosperity. We're clearly in austerity. Do I do I have expectations? Sure. Are they reasonable? Sure. Are they rational? Almost certainly. There's few assets in the captain's portfolio that have survived. Survived what? Not just now. We're talking about 2022. Celsius, BlockFi, FTX. What has survived is meaningful. What survived 2022 and certainly survived the last 2 months, or even back into October of 2025. That kind of volatility, surviving it, means everything. All that needs to happen in these crypto markets is for a protocol to survive and fit into our investment thesis. Because what survives is going to be part of a market that is hard to discuss. And we're not here today to discuss the exciting thoughts of where these markets are heading. We're not here to be tempted by where these markets will be in the future. That's not the point of today's stream. The point of today's stream is the reality that thinking differently is the only way to continue to exist in these markets. And that's all that needs to occur. You merely need to survive. Now, guess what? The beauty of it is deterministically locked assets. you're gonna survive. You're gonna have assets. They're gonna be locked. They're gonna be volatile beyond belief. Does anyone think the price targets of folks like Credible Crypto change, have changed, warrant adjustment? Any of the activity over the last weeks, do you think it affects any of that technical analysis or just reasonable analysis of where things will be? Of course not. Nothing has changed. All that has occurred is extreme volatility. And that's the point. The point is maybe for the unsophisticated actor, the locked position is a forced position and it forces hodling. Fine, from a simple perspective. I'll give folks that. But obviously, once you go down the rabbit hole and you want to get infinitely more sophisticated, you clearly can. And that is the point of our entire conversation about how infinitely sophisticated you can get with this relatively simple idea of owning a purchase, not a position. Bitcoin up at 69,787. Does it hit 70,000? Um, I don't know. I'm not here to do technical analysis today. Clearly, we could have significantly continued drawdown. The orange circles are identical. We got this fat wick that's pretty much spot on identical, albeit the wick back in 22 did not approach the 200 SMA so quick. The weekly 200, man, we were close to that weekly 200. That's cool. That was a fast drawdown. That's what I like to see. I like to see a fast drawdown. That implies decisions are being made. And that volatility is going to cause folks to come to conclusions about their convictions, their choices, what they really want to do with regard to their investments. That implies we potentially get resolutions, conclusions to these processes that are very often drawn out. Look at this process that was so drawn out between 2022 and 2023. This breach of the 200, the weekly 200s to the downside. Such a drawn out process of people just trying to get their shit together and figure out what the hell they want to do. Humans are so shallow, fragile, emotionally weak, and susceptible to fear, anxiety. And that's exactly what this consolidation process is. I mean, look at the Bitcoin narrative. If everyone was rational, they just buy it. And if everyone bought it and didn't sell it, the price just goes up. The whole reason you get this volatility is because people are weak, lack conviction, are afraid and fearful, and they're attempting to capitalize on other people. Capital gains. Frankly, those people scare me. Folks that try to capitalize on other people is predatorial, inherently a predatorial behavior. It just is. So, folks that lack conviction, I'm fearful of those folks. I I'm I focus on rationality above everything because rationality is akin to what I look for in smart contracts. That's why they're so comforting. Determinism, a bit of predictability. So a rational person has a set of procedures, operating procedures. They adhere to morals and ethics and whatnot, and there's a bit of an expected outcome to their thought processes. But when there's irrationality in play, there's uncertainty. That shit scares the crap out of me. And that's what, frankly, the smart contracts fix. That's why they're so comforting. All right, there's not much to look at. Technical wise, curve, volatile as all hell. Back up to 225.8 cents. Yield base is up 20% off the bottom. Heck of a volatile bounce. Aerodrome moving a little bit, 15%. I don't know. I'm not, I don't trade this shit. So I just, what am I reporting? Percentage change? One heck of a bounce off of the significant volatility yesterday? Doesn't mean much to me. I look forward to seeing the resolution. Sometime in 26, I don't expect this to bleed into 27. I expect 26 to be different than 22. We're in a very different macroeconomic environment. We're in an identical technical environment, which is literally what Ben Cohen talks about. And I agree with him from a technical perspective. And if you're trading these markets or attempting to do so and likely failing, that's the person to listen to. But if you're a buyer and an owner, different rules. You got four rules, four very simple rules. And you got to reprogram your brain in order to execute those rules effectively. Otherwise, it's very easy to get overwhelmed with this market activity. 69.9. Wow. We got punched 70K off of 10K, 7K on the day, 11% bounce. That was crazy. Dead cat bounce is what most would probably call it from a technical perspective. There's no way we punched directly through the 100 SMA to the upside. These past weeks have been extraordinarily volatile. This is not going to play out in a short period of time. We're not. So right now we're between the 100 SMA and the 200 SMA. So that's a period of uncertainty. Which way did he go, George? Are you going to go up or are you going to go down? This is going to take some time for the weak-minded folks that engage with these markets to figure their shit out, make a choice on what they want to do. All right, that's my story for today. Gold up to almost 5K. That's cool. Macroeconomics look like shit. Move with a bounce up to 62. It's not like it's just short term. It's not like we're back up at 80, that critical line that we've discussed for so many years. We literally discussed the 80 level for so many years. So I still see this. Nothing has changed as a forward-looking indicator of future conditions, monetary conditions, and the capacity of money to print currency. Nothing changes with that story. The XY back up to 97. Heck of a bounce off the bottom. Down to 95.6. The same decisions. We're back inside this range, this consolidation. You get isolated. Pick a direction. I expect 26 to be different than 2022. For all the right reasons. Everyone's loosening. Move finally rolled over. I mean, what were we doing in 2022? Move was literally exploding to the upside. Look at that. End of 21 into 22. Boom. And then it was years. We didn't break back down until August 2025 from February 2022. And you try to tell me it's the same macroeconomic situation. There ain't nobody out there that's going to have me think it's the same as 2022, merely because of this chart and merely because of the significance of this chart in the way global economics works with regard to money and currency. Dow Jones in the house. Peace. Arrow, good morning. Sergio, present. Good morning, Captain. One and only Snoke in the house. Much appreciated. You're very welcome. I hope the Divergent methodology is serving people well. 4 rules. Net worth will drive you nuts. This is a period in time where rule number 4 is paramount. Don't fuck up the cash position. The whole point of cash flow is to accumulate cash position. What is cash? Cash is the same thing as a paycheck that goes into a bank account from your job. You don't spend all your money from work, do you? Your bank account accumulates a little bit extra cash here and there. What do you use cash in a bank account for? You buy things. What do you use cash flow from investments for? You buy things. Buy what? More investments, or you accumulate cash, or that's it. That's what you use cash for. But you never spend all your cash. See, that unto itself is a divergent methodology. The vast majority of people in this country don't have $1,000 in their bank account. Now, obviously, I'm not here to be critical of anyone who's listening on the stream, but that's just a statistical reality. Most people are broke. They spend all their money. and then they borrow on credit the money they don't have, and they owe money. Not only spending all the money they have, literally spending the money they don't have. So rule number four is crazy. That fixes so much of what's broken with regard to the general public's budgeting complexities. Don't spend all your money. Holy shit, that's an idea. And then obviously, with the cash that you accumulate from work and from cash flow investments, you execute rule number one and rule number two. Rule number one, own more assets. Rule number two, know when to not buy assets. For me, I'm not buying assets. I don't want to mess up the cash position. I have a certain amount of cash. I have a certain amount of things I need to account for in 2026. Maybe I find a couple bucks here and there. I carve out a couple of bucks for a little allocation. I did for Anna. Modest, little exposure. Can't mess up rule number four just to accommodate rule number one. And I got to respect rule number two. And clearly, rule number three is just a qualification for what to own with regard to rule number one. So this is primarily just rule one, two, and four. And rule number four just fixes so much. Dow Jones, April 2021, BTC lost 55% in 90-ish days. Yeah, well, that's what we're looking at right here. Back in, it's really 2022. I mean, obviously, December of 2021 was our initial drawdown to the weekly 100, but it was really the breach of the weekly 100. That's your structural deviation. It's your moving average deviation. Everyone looks at the moving averages. That's why when you roll through a moving average, you get your extreme volatility because everyone's like, all right, it's rolling through the moving average. It's time to exit. Capital gains. What a poisonous perspective. So your orange circles are identical. That's it. That was a heck of a period in 2022. And then clearly, to get your really important perspective, this is the most important in my opinion. So far, we've lost less in a longer period, 120 days. Well, listen, my 2 cents is we never saw a bull market. And that's based on the way global money is used to create currency. We've been waiting for a bull market since February of 2022 when money broke and money stopped being used to significantly create global currency. Now, clearly, you still have global currency creation, but we're talking about the systemic structural expansion that accounts for these leaps forward in economic activity that we've seen since 2008. Frankly, it always happened, and it has certainly happened with gold, just to a lesser extent. But cyclically, when the volatility of money gets low, the same phenomena occurs between gold and what's now used as global money, United States Treasuries, because of what I've described in the underwriting process. When the volatility of money is low, it's a forward-looking indicator for the bankers to take on collateral, to print liabilities, to fill their double entry accounting and balance their books. It just makes sense. That's a core component of my thesis. And it's very simple thesis based on the way banks work, based on the way underwriting makes sense and risk makes sense. So I don't think we ever saw a real bullish environment where global currency supply was structurally expanding. But that's where we're heading. We're heading into a period where global currency supply finally has a chance to structurally expand, which we haven't seen in years. And the last time we saw it was the artificial creation of that environment in 2020. And before that, the last time we saw it, bum, 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 2016. As you can see by where I am with my cursor, 2016. Notice the getting stopped out at about 80. And then the rollover, 2016, 2017. Oh, okay, that was the crypto quote unquote bull market prior to 2020, 2021. Coincidence? I think not. I think it makes perfect sense. Killis, good morning. Always a pleasure. Happy that so many long-term folks have stuck around. Surviving is all that matters. Hola. Buena tarde. ¿Qué horas son? 12 en la tarde. Ok. ¿Cuánto trabajo yo tengo? Tengo más. Let's go sideways for a few months, most likely. I don't know about months. I don't know the duration, but sideways is likely as people figure their shit out. We need structure. Well, we have structure with regard to capital management. We operate on a divergent methodology that's quite distinct from what most people do. And that gives us peace and calm and allows time to pass while the crazies out there make a choice. Dead on both sides. My man. Hope it helps. Legendary streamer, tape pusher in the house. Howdy. Another long-term participant in these crazy markets. Did you say 26? No, there's no way. I don't think so. I'm an MA kind of guy. So you got levels, MA, trends. Trends mean shit to me. Levels are first, and we just literally got to the 65 level, which is basically candle body close, weekly candle body close back in 2021. That was all-time high 2021. As you can see here, candle body closes. Um, and it was also basically right down the pipe over 2024 consolidation. Okay. So coincides also with the 50 SMA and the monthly. We've never hit the monthly 100. Never had a mean regression there. 2022 was a heck of a drawdown, a breach of everything. I think it's just a different market nowadays. I don't. If we breach the 50 SMA, I don't think we breach it significantly. I don't think we push towards the 100. Nor does it make it mean anything to me, whether we do it or not. I just don't see it in the cards. Anywho, DCA man, good morning. Much pleasure. Arrow, I continue to have an appreciation for projects that have survived from 2020 to 2023. The perspective that's impossible to have unless you experienced it is 2019, 2016, 2017, frankly, 2016 to 2019. And, as much as I could verbalize what occurred back then, it's hard to really express the delta, the difference between pre and post 2020. And that means everything to me. Back in 2019, there was a $500,000 on Uniswap V1. The V1 user interface was quite remarkable in comparison to what exists today. There was nothing in 2019. So what survived 2020 to 2023, you're absolutely right. It means everything. It means everything with regard to what's potentially going to be. So what survived is going to likely continue to survive. That's called lendiness. The longer a technology continues to exist, the more likely it's to continue to exist. It becomes entrenched, not just with regard to consumption, but with regard to psychology. People look to it. It is what exists. It becomes infrastructure. And not everything survived 22. Heck, even Balancer had a big hiccup. There's very few systemically significant crypto fintech businesses. Simple as that. Bought BTC for the first time in years last night, but concerned about fucking up the cash position. Careful with that cash. You know your bills. You know the money you need for the year. Don't be tempted too much by investing. You, my friend, have spent years buying, executing rule number one, attempting to respect rule number two, consolidating losers into winners. You don't need to keep buying things. For the folks that have been here for years, you don't need to just miss an. It's great. You have cash. Rule number four. You don't need to miss an opportunity. Bitcoin dips, don't buy it. Curve dips to 20 cents. You don't need to buy it. Now this is different for folks that are just getting building what they own. They own nothing right now. Yeah, clearly you should probably be buying things. But for folks that have been buying things for years, my perspective remains what deflates reinflates. I mean, does the targets of folks like Credible Crypto change? If the targets haven't changed and they don't make sense to have changed at all, then I don't give a crap if there's an opportunity with cheaper prices. I've spent the last 4 years buying. What deflates will reinflate. Hope that helps. Peter, good morning. Much a pleasure. The asset Drew. Let's go. First look in the chat in a year. I need to lock in on investing since my AI job is done doing nicely. Watching Cap since 22. Grow is a reason I can talk about investing to people. Investing. We don't gamble. We don't trade. We own. We make purchases. We don't have positions. We have a thesis, a methodology. We have a capacity to tell a story. Dinner table investing. We could sit down and not sound stupid at the dinner table. You know, how the parents will say, how's your Bitcoin position doing? And I'd be like, Mom and Dad, it's much more complicated than that. Do you want to talk about it? And then you could start an entire conversation. Dinner table investing. Your goal is to have a story to tell that's sophisticated, robust, advanced, methodical, structured. And that's different than the majority. And that's a good thing to be. Good thing to be different than the majority. Yes, I agree with Arrow having more respect for those projects still around from last cycle, especially the ones still building and improving. Oh my God, the fact that protocols, crypto fintech businesses are still iterating and improving. There was no businesses prior to 2020. There was no fintech. There was no economics. There was no currency supply. There was no emerging market of emerging markets. There was literally mainnet prior to 2020. And the vast majority of the stablecoins were on centralized exchanges. And there was a $500,000 on Uniswap V1. There was no concept of this liquidity and depth and flow and all these arbitrage bots and cross chain. Oh, there was none of this. There was no emerging market of emerging markets. It just didn't exist. So where we are, no matter the volatility, is extraordinary. And to me, that's comforting. Previous 69K, all-time high resistance flips to support. My man, now that is a contrarian perspective. It's not really contrarian, it's just an observation. Pretty damn spot on right there. So resistance flip support's a big deal. Pretty simple right there. That is a powerful, simple observation. Now it'll breach below, may breach below, or it did breach below with the wick, may go below. But what's pertinent is where it is in the future. And if it structurally doesn't produce lower highs and lower lows, that's consistent with the resistance flip support. But this is a monthly chart. Check back in a year with 12 candles. You're out here on the right, somewhere around here. All right. So if it dips below, whoopie-do. Boop. Maybe another retest, higher high. That's a resistance flip support right there. Even if it goes below. Good observation. The asset Drew, yes, yee, this is why I'm so bullish curve, convex fracks. Deterministic immutable protocols. Plenty of complexity, plenty of controversy. The odds are that they continue to exist. The odds are that they continue to iterate. The odds are that the software is immutable in most part, aside from governance. So the odds are in people's favor. All these businesses need to do is survive because in the future, currency supply comes on chain from an external source, primarily USDC, USDT. As that currency supply comes on chain and collateral appreciates, people borrow capital. And it's not to gamble. The future that I see isn't people borrowing for margin and gambling and leverage. Sure, there's going to be that for yield farming, but it's borrowing. What do you go to a bank for when you have if you have a house, you go to a bank for a HELOC to borrow some money for capital improvements. All right, so you got a half a Bitcoin, you have a Bitcoin. Bitcoin's worth a half a mil, you borrow 50 grand. That's a HELOC. It's, well, it's a BLOC, a Bitcoin equity line of credit. Get it? A BLOC? Instead of a home equity line of credit, it's a Bitcoin equity line of credit. Okay, so people borrow money for purposes other than gambling or speculation. They borrow money because they want to do a home improvement, or they borrow money because they buy a car and it's a competitive interest rate, or they borrow money for medical complexity. God forbid. There's plenty of reasons to borrow money rather than leverage and gambling. Farming and mining makes sense. Earn more passive while price draw down, cash stays the same. Well, farming and mining, that's outside the scope of what I consider investments, but that's okay. To each their own. What is your opinion about CRVUSD and its capacity to maintain the peg? I think it's fine. I think people underestimate the mechanics of its design. Elevated interest rates are what secured downside at the expense of total collateral in the system. People will close positions, close their leverage, close their debt. And at some point, the interest rates come down and that stabilizes the system. So my expectations is that the interest rates stay high until peg is restored or whatever minor deviation there is. I don't see an existential threat currently existing, but the beauty of it is, even if it existed, I have no capacity to make a choice. Now, I did a post the other day. If I have no capacity to make a choice, am I going to worry about something? No. And my entire method of operation is designed to minimize the choices that I have to make. I have no capacity to do anything. If Curve fails, I can't sell it. Therefore, why am I going to worry about it or think about it? And the odds are in my favor. The odds are in my favor that it continues to exist. Therefore, there's no reason for me to worry about anything. Paraphrasing Warren Buffett, if you buy quality assets at the 200 WMA, you will do well. Problem is, most people don't have the discipline to do it. Yeah, assets, cash, investments, 200 weekly. It's a heck of a weekly MA. And frankly, that's where you are from a Bitcoin perspective. You literally just interacted with the 200 weekly. And historically speaking, from a Bitcoin perspective, that's a heck of an interaction. Now, back in 2018, it was touch points. Back in COVID era, March 2020, that was a wick, and everyone was peeing their pants back in March of 2020. I remember that very clearly. And then clearly between 2022 and 23, we had our downside deviation of the weekly 200. People had to figure their shit out coming off the heels of FTX, Celsius, BlockFi, etc., etc. I don't expect 26 to be like 22. Maybe, which makes much more sense, I expect 26 to be like 2018 without March of 2020. So you get this bounce off the 200, which we basically just had. You get some sort of recoup to a price level comparable to December of 2017 highs. And you trend horizontal until you finally get your global currency supply expansion. And then everything reprices because that's what limited supply assets do. Peter, the more research I do on Samsara Nirvana, the guys really built something novel and immutable. Really the only thing I'm interested in. Heck of a protocol, a floor price. It's an on-chain treasury. These are the DATs. Same thing as all the ETFs, the microstrategies, except on chain, evolution of protocol and liquidity, a floor price. The price of the asset cannot go below the floor. That's the point of what Nirvana and Samsara are. Free circulating supply, if 100% of it is sold, the floor price is the cheapest price possible that can occur. And that's a heck of an interesting protocol. So, quite fond of what those boys built over there. Looking forward to earning solid, eventually testing out the borrowing. Sure, that's cool. The borrowing for leverage purposes, non-liquidatable, or the borrowing for take it as cash flow. So a couple of choices. You have to see how that folds into optimal capital management for what I do. I'm not a leverage kind of guy, so that's probably a cash flow source for me. So very fond of what those boys built. Hey, look at that. Bitcoin above 70,000. Some serious volatility. Wow. Today is going to be an interesting day. Should be an interesting weekend. Should be an interesting couple of weeks. Should be an interesting couple of months coming forward. 2026 should be interesting. Do we need to say more? Let's leave it at that, ladies and gentlemen. I think after this week's volatility, I hope this conversation is comforting. If anything, our conversation is consistent. Nothing changes. And that's the best part of our conversation. The reason our conversation doesn't change is because it's a divergent methodology. The methodology is designed to be above and beyond the average perspective. Rules, four rules that are repeatable under any market condition, and a psychology that is infinitely more stable than the average market actor. The point of the conversation we've had over the years is to be different. And if anything, our consistency expresses our difference. DCA man, I love your stoic philosophy, Captain. We should only worry about what we can't control. That's what we. That's why we shouldn't stress over locked assets. There's nothing we can do if they fail anyway. That's right. And we chose our investments. We own what we own. There's only so many things to own, and we had how many years to make our choices. So everything we've done is a manifestation of our years of work and choosing. So it's going to be what it's going to be. And we live with that. And that's okay because the vast majority don't live with their choices and they live in fear and they live in regret. They're constantly filled with anxiety. So your goal, our goal, is to cure all that and continue to engage with these markets independent of the insanity, independent of the volatility, just thinking differently, always having a consistent story. So no matter what market conditions are like, when you sit down with friends and family, you tell a story, and it's a good story. And that's something to be proud of. Currently, rule number one, thanks, Cap. You got it. It's dependent on years in the market, time in the market, capital availability, which is rule number four. It's dependent on all those factors. And we had a fun little looping exercise on Discord the other day where we were just going back and forth between rule number one, rule number two, rule number four. Not really rule number three. Rule number three is just a qualification of what to own. But basically, rule number one, two, and four just play into one another recursively and cyclically. That's the beauty of very generic and broad rules. This helped me tremendously. You're very welcome. We'll do it again next week. Life is about choices and living with our choices and being comfortable with our choices and being in control and not having anxiety, not having fear and minimizing choices because if you minimize choices, you have less work to do. Isn't that a beautiful thing? Less work to do. People fear the locked position. I've always seen it as the most extraordinary financial offering I've ever seen. And that's probably quantitatively expressed in the accounting we've discussed over the years. thoughts on Vitalik's article about L2s? That's a very interesting one. I'm going to wrap this up in a couple minutes, but see what I could say about that. I would love to say that was an inevitable position that we find ourselves in, or he presented. Wasn't it always going to come back to L1, mainnet? Mainnet's where all the money is. I don't know what becomes of the L2s. I mean, clearly Coinbase is heavily invested in Base. Base is Divergent. But and then Base drags along Optimistic Superchain, and then Aerodrome ties it all together. Optimistic Superchain, which includes Base and Mainnet. So, in terms of exposure, Vitalik's conversation negligible from an Aerodrome perspective. Great. If the world is discussing mainnet, what happens to Optimistic Superchain and Base? All right, so we're exposed vis-a-vis Aerodrome, which gives us exposure to everything. So exposure is a phrase we've used over the years. We want exposure to things that offer us free exposure to many things. And that was always the narrative for Velodrome. And that was before like Base was off on its own or Aerodrome was off on its own on Base. But that was always the Velodrome narrative. They're expanding more. They're giving us more optimistic superchains, free exposure. So exposure is a good one. So it's going to unfold how it's going to unfold. But guess what? Curve goes cross chain, Aerodrome goes cross chain. Yay. We could watch it unfold, but we have all the exposure we could possibly have and need. And everything will unfold around us. People questioning, is the L2s important? All right, great. It's important, it's not important. We have exposure either way. My man. Thank you, Kat, for making us every week more rational. Enjoy your weekend. Much a pleasure. Thanks for joining. We'll have a good one next week also. I have no doubt about it. I feel more rational today. My man. Much a pleasure. Arshall's in the house. How are you, my friend? Hope everything's hanging in there. Good morning, Cap. Already bought the assets. Can't do anything about it. So instead of feeling bad, I was shorting Bitcoin to keep my mind. Do what you got to do to let the time pass. Do what you got to do to maintain sanity. That's all that matters because time has to pass. The only way out of this is letting time pass. So we have to find our peace and find our divergent methodology that allows us to find our peace. Thank you for joining me Friday, February 6, 12:23 p.m. 111 people made it to the end of the stream and are all now that much more rational because of it. I appreciate each and every one of you. Do some cardio today. Find some sun, hit the gym, hit a sauna, take care of your health, take care of your friends, take care of your family, take care of your kids, and try and find your peace. No anxiety. There's no place for anxiety. See you guys and gals next week. Until then, peace.